Welcome to InsurTalk, Concurrent Coverage. This video is about concurrent coverage. What is concurrent coverage? What happens when it exists? And why customers should be mindful of this. Concurrent coverage exists when the same subject matter insured is covered under more than one policy. So in the event of a loss or damage, there is a claim which is triggered under all such policies. However, if the interest insured is different, or the coverage is separate, or the policy periods don't cross each other, then there is no concurrent coverage. There has to be a commonality of interest and coverage for concurrent coverage to exist. For example, if an insured property is covered under both fire and marine cargo insurance policies, then there is concurrent coverage. If there is a fire loss, then it is covered under both fire policy as well as the marine policy. So the question then arises, which policy would respond to the loss or damage? The answer to this question is decided by what is known as the other insurance clauses, which form part of general insurance policies. There are three types of other insurance provisions to handle concurrent coverage situations. The first one is the contribution clause. The second one is the excess coverage clause. And the third one is the primary coverage clause. In the contribution clause, the policies contribute to the loss on a proportionate basis. All the policies should have the same contribution provision. If one policy is contributory and the other is not, then the contribution cannot work. In excess coverage proviso, the policy only comes into play when the claims under other concurrent policies are exhausted. If there is any shortfall under the other policies, after the sum insured or limit is exhausted under them, then the insured can claim under the excess policy. In a primary coverage proviso, one policy acts as the primary and the insured has the option to claim under that policy. This policy will be non-contributory and will not ask for contribution from the other insurance policies. So, does this all look a bit confusing? I'll give you a hack or a tip to understand this better. In contribution, the policies are sitting horizontally. All policies have the same priority and they contribute to the loss. In excess policy, one policy sits vertically over top of the other. The excess policy, which is on the top, comes into play only after the policies down below are exhausted. So this comes after this. And in primary policy, there is only one policy that comes into play. All other policies cannot be asked to contribute to the loss. So the insurer who has issued the primary policy is responsible for the loss or damage. So this, in short, is the concurrent coverage provision. Now the question to the answer, which I posed in the very beginning, if there is a fire policy and a marine policy, which policy would respond? The answer is the fire policy will respond only after the marine policy responds, because the fire policy has an excess provision which says that it will respond only after the marine policy has responded. Thank you.